We had a great month, and I've been posting things all over Voxer. And I just want to thank everybody for all that they do. I really appreciate you, and it's such a privilege and pleasure to work with you. I love the fact that we are the mentor and the student at the same time, and particularly in this team, we all learn from each other. Tonight, my husband, my sweet husband, who's in Connecticut, is going to talk to us about the tax advantages of being an entrepreneur and in the wellness business with your home-based business. So, honey, thank you for taking time. I know you had we both woke up at 3:30 this morning to get him to the airport, so we're a little tired, but I really appreciate you explaining this to all of us because I need to hear it every year, and I know they do. And please feel free to ask questions after he's done. So take it away.
Thank you, Danny.
Thank you, Danny.
Thank you, Maura. Hello all. I got to start, Joanne. I have to tell you, your meditation was great, and I was floating away on the cloud on the mountain. Then I saw an IRS auditor come out of the trees, but I got him floating away on the clouds. It was great. He just floated away on the clouds.
Danny, did he have like little devil ears?
Oh, he was nasty, nasty guy. They're nasty people. So yeah, taxes. I should start by saying, as many of you know, I'm an attorney, but I'm not a tax expert, and tax is not my field. But I do know a bit about it, and so take everything I'm going to say with a bit of a grain of salt, and you should certainly always consult with your own tax advisor. But that being said, I think we all have to understand the benefits we have being in both a home-based and a home-based business, and also a self-employed individuals. And as many of you know, we're self-employed. That means the company, the Juice Plus company, every year gives us a 1099. Okay, you all have gotten one by now, I think, for 2018. That shows your income, which is all of the income you earned, including those of you who are in leadership positions, the benefits and bonuses that you may have earned through the year. And of course, that is taxable to you. And because you're an independent contractor, you understand that no taxes were withheld from that. So one of the things you have to do, and everybody's situation will be different, but as a self-employed individual, and I am a self-employed individual as an attorney as well, so Maura and I are both self-employed, all of our income is not, there's no withholdings at all, so we have to file quarterly estimated returns every year. The IRS requires, if you're self-employed, that you file quarterly, and those are due April 15th, of course, which is the same time your taxes for 18 are due. Your first estimated quarterly payment for 2019 is due on April 15th, 2019. The next one is due June 15th. The next one's September 15th. And the final quarterly payment, again, that would be for this year, for 2019, is due January 15th, 2020. Now, don't despair if some of you have not done that, because I think a lot of you have other sources of income and probably are working as an employee. In other words, you have taxes withheld from something else, and that's fine. But as you grow in this business and earn more, it's more and more important that you take full advantage of the deductions that you have, and also understand your responsibilities, which is to file, to make quarterly estimated payments. Basically, there's a safe harbor that says if you estimate your taxes in 1 year and it's at least 80% of your actual taxes for the previous year, there's no penalties or interest to you, okay? If you are under that, it's not a big deal either, but when you do your taxes, the IRS will look back and go, wait a minute, you didn't give me enough in those estimates to get where you should have been. So there's probably a little small penalty or interest due too. Does everybody understand that? Are there any questions about the IRS requirements of payments? Because then we'll get to all of the deductions that you have. No? Yes. Who's that? Amanda? Yeah.
You have to unmute, yeah.
Yep, I got it. Now this is there a certain amount where this comes into play, like $600? I always hear that starting to pay taxes on your earnings is above $600.
Yes, that is true, but that is your total earnings. I mean, if you earn $600 from all sources, you don't have to pay any taxes, okay?
Okay.
But if you only make $600 from Juice Plus and you make $10,000 or $20,000 from something else, you do have to account for the $600. So it's not like just Juice Plus. If you're just starting out and you just made a few dollars, that's fine, but you still have to account for it if you made more than $600. The other thing to think about, which is very important, especially for people who are starting out, you may in your first year only earn 600, or maybe you earn a couple of thousands of dollars, and you may have expenses that we're going to get into that are $2,000 or $3,000 or $4,000. You can offset those expenses against other income that you have from other sources. So just because you only make, let's say you make $5,000 from Juice Plus, that doesn't mean your expenses are capped at $5,000. You can actually have a loss at Juice Plus, and Maura and I had losses for the first few years because we invested in the business and while our check was growing. You can offset that against other income. Does that make sense?
Okay, yeah, it does. Yeah, I have just really been doing this since maybe September, October. So I don't have that much that I've accumulated.
Right.
For the first
And
year.
quite honestly, from what I understand, Amanda, the company doesn't send out a 1099 until you've made $500.
Yeah, I didn't get one, so.
More than $500. That's my
Right.
understanding, Danny. I might be wrong.
I didn't know. I mean, that's a company policy then. That doesn't, quite frankly, that doesn't mean you're not responsible and they're right for taxes on that amount, but it's such a small amount, it's not worth worrying about.
Okay.
So deductions and offsets, which is really an important thing that all of us should consider. There's two parts to this. First, the home-based business part. You should understand most of us work in this business from our home, and the IRS recognizes that that is a business. And so you are eligible to write off a percentage of your home expenses if you had, to the extent that a portion of your home is dedicated primarily, and that's the word, primarily to your business enterprises. So it's as simple as if you've got a Juice Plus office and you're using your Juice Plus office and it's 200 square feet and you have a 10,000 or a 2,000 square foot home, that's 10%, right? That means that 10% of all of your expenses of your home and all of the things you can think about are deductible. So your mortgage expenses, your insurance, your taxes, your heat, your electricity, your plumbing, your cutting the grass, all of the things that go into home ownership, you can write off appropriate percentage. Now, the key thing is you need to figure out what is quote unquote primarily, devoted to Juice Plus. And then you should figure out how big your house is and figure out what that percentage is and come up with that. Because if you get audited, the IRS is going to want to know. And be realistic. It's most of us have an office. Maura has an office in Connecticut and an office in Florida. I have an office in both places as well. So and if your spouse is in the business or if your spouse is self-employed like I am, you can write off two offices, okay? But you have to figure out what percentage that is. And that can add up. You know, you can have a significant amount of expenses. Just think of this as a business, and if you had an office, you know, that you went to every day to do your business, all of those expenses, the rent or whatever, would be deductible. It's the same concept as a home-based business. So that is one benefit of a home-based business that, and quite frankly, a lot of people don't do it because it is, you know, there's a bit of effort involved to figure it out, number one, and then keep track of those expenses, and, you know, keep them on a spreadsheet, keep them on on your computer through the year. But once you get used to it, it does add up, especially when your income comes up. Annette?
Danny, isn't there a simplified way that our tax people can do that without keeping track of our utility bills and our mortgage?
There is a, you know, some, let me put it this way, some accountants will, you know, just take an overall percentage and say, this works. I'm not, that the IRS doesn't say that's how you should do it. They want to know what the percentage is, and, but as long as there's a valid basis for your deduction, you're usually okay in it. Yeah. And a lot of people, I think the IRS is also realizes that a lot of people aren't going to capture everything, you know, how much you pay, you know, I'm talking garbage collection. I'm talking, you know, if you had to get a termite, you know, you had termites in your house, maintenance, a new roof. Now, when you get into capital expenditures, then you got to amortize that over their useful life, which gets a little more complicated. But the bottom line is, ongoing expenses of your home, a percentage is deductible from your income. Now, again, understand that's not a credit against your tax. It reduces your taxable income. So if you're, depending on what bracket you're in, if you're in the 30% bracket, you know, every dollar that you can offset, you know, saves you 30 cents in taxes. Then the other broad area that is deductible for us, of course, is all of our various business expenses that we incur through the year on our Juice Plus business. And, you know, those are everything that we do through the year, and we can go through them. You know, you are event costs, okay? If you have an event in your house, the food, you know, right down to the ice and everything else that you buy for that event and you do for that event is deductible. Travel, flights, every time you go to an event, we'll talk about mileage and car expenses in a minute, but airline tickets, going to conference, your conference tickets, meals and expenses at conference, the stuff that you buy from Promo Plus, all of those things that you use in your business, samples that you give away. And we'll talk about samples in a minute on how at least Maura and I do it. All of those things are deductible. I would urge you strongly to consider having a dedicated credit card for your Juice Plus business. You know, there's a lot of credit cards out there that are, you know, some of them don't have annual fees. The more you can have a dedicated card that every time you do something, you put that on it, it makes it a lot easier at the end of the year to look at that statement and go, okay, you know, that's all Juice Plus. And I personally love American Express because they, in my mind, they have the best annual reconciliation at the end of the year, especially if you have a gold card or above. They will send you an analysis of everything you put on that card, whether it's travel, expense, entertainment, et cetera, et cetera. Maura and I, sometimes we slip up, but we really try to keep business expenses on a card and personal expenses on a different card. Now, of course,
Can I say one thing,
yeah, go
honey?
ahead. Yeah.
You can write off Teamsy, you can write off Ray Higdon, you can write off personal growth, you can write off books, training, anything that you are using to grow yourself, which grows your business. Now, mind you,
Your phone, your internet, your fax, buying stuff, but buying a computer that's dedicated to Juice Plus, buying a copy machine. Those single bigger ticket items are deductible in the year that you buy them. Let's talk about samples or product, because that's a big one for a lot of people. And basically, the rule is you cannot write off what you use personally, okay, for yourself or your family. But you can write off everything else that you buy for giveaways or otherwise. Now, Maura and I look at our Juice Plus expenses of all of the products that we buy every year, and we come up with a percentage that we feel is justifiable. And that's usually around 50% of the total product that we buy, we write off, because about 50% is just for us. And we do buy quite a bit because Maura gives a lot away. So think about that. Car expenses are a huge item. There's two ways to do it: mileage, which I probably would recommend you do, or total costs of your car divided by the amount of use you do for Juice Plus, which gets into the cost of the car, maintenance, etc. The best way to do it, I think, is mileage. And again, the trick there is coming up with a way that works for you to keep track of your quote unquote business miles. There's a couple of different apps out there that are, all of which I think you have to pay a few dollars for, and you still have to put in where you're going and where, that to start it and to stop it. We use a little low-tech system called, a little notebook or a little piece of paper where we jot down where we went and the approximate mileage. If the IRS audits you, they want reasonable documentation and reasonable backup. Okay, it doesn't have to be down to the you can say drove to an event in Massachusetts, 200 miles round trip, tolls X dollars, etc. And if you have that in it, and you went to an event in Massachusetts, that's good enough. You don't have to track it to the eighth of a mile. But you do have to have something. And the other thing you have to consider is, because the IRS, when you start doing this, they'll want to know what your what your car mileage was at the beginning of the year and at the end of the year, every year, and they track this. So if your car has 20,000 miles on it, and at the end of the year you got 40,000 miles on it, and you write off 20,000 miles, guess what? If the IRS sees that, they're going to go, wait a minute, that was dedicated 100% to Juice Plus? I don't think so. So you got to be reasonable about the amount of miles. And again, reasonable supporting documentation is what the law requires. But, donations, team gifts, giving away things, business cards. Let's see, what else am I missing?
raffles, customer gifts, customer appreciation events.
Yeah, any business expense, meals and entertainment, okay, are written off. Again, you can write that off, but the IRS says only 50%.
Right.
So, if you take somebody out to dinner and you talk about Juice Plus, that's deductible, but you can only deduct half of that meal, half of that expense. Be careful. The IRS does look at how much entertain, because that's one of the ones that a lot of people misuse. If you're taking 6 people to a concert, you know, in Denver, Colorado, and you try to write the whole thing off, and none of them are clients, you know, you might, if you got audited, they may raise an eyebrow or two. But it's certainly legitimate to, you know, your own meals when you're at events are deductible as well. So when you go to conference and you go out to dinner, that's a deduction. I mean, your own meals. Typically, your own meals are not. You know, when you're at home, you can't just go out to dinner and write that off. You know, talk to yourself. That doesn't work. But when you are away at an event, you can write that off.
Danny, if it's your own meal at an event
Mhm.
and you can write it off, can you only write off 50% or 100%?
I believe it's still 50%.
Thanks.
Yep. Now, keep in mind that I know a lot of people on the call have varying incomes of Juice Plus, but a lot of you or most of you have other income. So you can, again, you can write off more than you make. It just gets applied to other income that you have. Keep in mind that the IRS wants to see a profit in a business in a reasonable period of time. If you are continually writing off huge amounts and never making any money, they consider that a hobby, and hobbies are not businesses and therefore not deductible, because they figure you're in business to make money. And the rule of thumb is within 5 years, they like to see a profit. And that's pretty easily done in the Juice Plus business if you're working the business. But don't feel bad about, you know, having $2,000 of income and, you know, $3,000 of expenses in the first year. That very often happens. Yeah, Jared.
Just one caveat to this. I ran into this year because I was deducting everything from my business, self-employed last few years. Wife and I go to apply for a mortgage, and it came around to bite me. So definitely, if you're doing this and you're writing all this stuff off, and you're self-employed, make sure that if you at least have 2 years of substantial income if you're going to apply, because if not, you know, all your deductions will hurt you.
Well, that is a very good point. If your taxes, if you don't pay any income tax, it usually means you don't make any money. If you don't make any money, it's hard to buy, you know, it's hard to borrow money. That's what you're saying. And it's true. So, you know, that's, you know, that there's trade-offs to all of this, right? But you know, it's a significant write-off for us every year. Now, Maura is in an income bracket now with Juice Plus, so that it, you know, she's making some good money at it. But we write off a lot. We write off a lot of what she does and what I do too, because I'm in the business and I have an income at it, and so I'm writing it off as well. I think that's all I wanted to cover. But I'll be happy to open it up for any questions or anything else that anybody thinks I missed.
Well, Danny, thanks for mentioning the 2 offices thing, because as you know, Nick's a distributor and he has his office upstairs. So we'll consider that this year along with my office, which is my living room.
Yeah, and
Yeah.
now Mick is, you know, he's now, he may be able to write it off for his other business too, Donna. I mean, I write off my office for my law practice because when I've been down in Florida, I've been working from Florida.
Right.
So I'm writing off parts of that. I don't really write off much of Connecticut because I don't do anywhere near as much work, legal work, when I'm in Connecticut from my house. So it's really, the primary thing is that space used primarily, which means more than 50% for business purposes.
Yeah. Yeah. It's a great, it's an aha for me. We've never deducted that part of the house. And yeah, now that he's retired, so we'll look at that. So thank you.
And don't forget, you can write off, obviously, all the events we go to, but also, I was surprised that I could write off things like my personal growth and personal training. When you do a lot of things to help yourself grow, you can write off that. And I found that really helpful because I believe in investing in myself and growing. So that was a really good.
Yeah,
that was
that's educational expenses that are reasonably related to your job are deductible. And you're right, but you're right. I mean, a lot of the self-growth, I mean, the Brave Leaders things, certainly, for example, that Ham and I and others are in, that expense, it's not very much, but that's deductible, clearly.
Hey, Danny, when I was a physical education teacher, I could write off a certain portion of my clothing because I had, umpteen sneakers and uniforms and things. What about gowns that Maura has to wear to these fancy events?
No, you
Thank you
can't.
for asking that, Donna. If I had asked it, he would have called me Leona for Leona.
Hey, you gotta
Now,
have
Donna,
clothes on.
But buying Juice Plus shirts that you give away, and even buying a certain amount of them that you wear because it's advertising. Don't forget, advertising is deductible.
Clothing with advertising. counts.
Well, yeah, but not. You can't. When Maura was a fine art artist, she did a wonderful picture of a great big Italian vase that we had. It's very expensive, and she wanted to write off the cost of the vase. And our accountant said, "Wait a minute, where is the vase now?" "Well, it's in our kitchen." "What do you use it for?" "Well, we serve out of it." "Well, no, it's
Good
got to
try,
be
Maura.
right." So it's yeah, no. The thing on clothing is it has to be a necessary part of the business. So, if you're a cop and you gotta buy a uniform, that's deductible. But, going to the Eltons in a new gown is not.
Hey, what about your tux?
Nope.
Black tie affair.
Nope.
Susie has a question, honey.
Is it true you can do dry cleaning though? I've read that before. You can do dry cleaning.
After the event, yes. Be careful. Don't. I mean, I'm now we're splitting hairs, but if you're doing dry cleaning before an event, in other words, it's a reasonable expense of going to that is getting your clothes, your clothes clean. But a lot of people try to do that. I'm a little more, again, to me that the IRS goes, is this a primary business? Would you not pay for this thing but for your business? And you'd probably do dry cleaning regularly anyway, right? So it's one of those, it's really, just think of it as, is this something I would do if I wasn't in the Juice Plus business? If you would, it's probably not deductible.
Mhm. Okay.
Anybody else? Anything else? Now's your chance.
Hi, Sue.
Hi, I was gonna just say, if anybody wants help with mileage, I use an app called Mile IQ. And it's really cool because the minute you get in your car, it knows. And if you're going somewhere personal, you swipe to the left. If you're going somewhere for business, you swipe to the right, and it tracks where you went. And at the end of the week, you can have a report emailed to yourself, and it tells all your personal and all your Juice Plus. And you
Oh
can-
my goodness.
really cool because it tracks it all for you, and you just have to have your location service on. And
Is that a paid thing, Sue?
no, it's free,
Really?
and it's pretty cool. I've been using it for years, and I really
But
love it.
Sue, how does it track where you went? In other words, you swipe, this is business, and then you drive 50 miles. It doesn't really, How,
Well,
how does it relate
like
back
30,
to? Okay,
like it knows when I'm at home because I have that listed as home. And
right.
then when I go, I get to the next place and it'll beep and I can either swipe personal. So if I'm stopping on the way, I can. Otherwise, it's tracking my mileage the whole time until I hit my destination.
But does it tell you when you get that where you went?
It gives the address.
It does. Okay.
And then it asks you if you want to type in, you can then type in the name if you want and make it more detailed.
Because just remember, if you get, you got to be able to say, you got to be able to say what the business purpose was that you drove that 50 miles.
Yeah, you could type it in there.
Yeah,
And,
good. That's
when I
great.
get my weekly report, I can add handwrite in or I could add it in, but it lets you could type it online, you can type it on your phone. It's pretty user friendly.
Can you see this, Sue? Is this, no, you can't see it.
Mile IQ,
Oh,
yeah.
yeah, there it is. Not
Yeah,
Sue.
that's
It's mileage tracker by Mile IQ, and it's got a little orange square with the squiggly. Is that
Yeah.
it?
Yeah,
Second M,
that's the one.
second M and I, yeah.
And then there's the one my accountant had recommended that I use for tracking receipts of every kind. Expensify is another awesome app.
I've heard of Expensify.
It scans your receipt, it categorizes it by, and you could type right on food and beverage. I could write, I took Donna Burns to recruit her and, I could put a whole note and then get a weekly report and then it's all done for me and I don't.
Expensify, FY.
Yeah,
app?
EXPENSIFY. And it looks like, let me see if I can show you the app. I don't
That's
know.
great. That's great too.
You can't see it.
What does it look like, Sue? What's that?
Says Expensify, and it could do airplane tickets, it could do meals,
Here,
car.
we can show it again. We can see it,
Just hold it up. We'll see it.
Okay, hold on.
but you have to talk. So you're the big screen.
It's only showing, when it opens, it only shows the inside of it. So if I show you the E, I don't know if you could see the E. Can you see the E?
Yes.
Oh, yeah, okay.
Turquoise and magenta.
Yeah, it says Expensify. And it has an E with yellow, green, and blue around the E. It just makes it a lot easier because like I lose receipts, but if I quick scan them, categorize it, I don't have to worry about losing them.
And that's why Danny and I like the American Express so much, because they send us an annual summary of our expense, of what our charges were, and they break it down for me. So I know, like, my internet was broken down, my business services, Staples. I mean, it was just everything. That's the same thing. So if I do the Expensify, the Mile IQ, and my American Express, I'll be golden. I'll just hand my accountant all of that, not do anything. No, I'm kidding.
The other one is Eventbrite. If you ordered anything, you went to any event on Eventbrite, it's listed. You can go back to the app and it will have all your listings there where you attended.
Yeah, American Express has a special place for Eventbrite, believe it or not, Sue. So, Ham, did you have a question?
No,
Okay.
thank you.
Thank you for this information, Danny, and thank you, Sue. And great questions, everybody. Anything else? Anybody has anything else? I know from personal experience, when I started the business, my expenses climbed for about the first 3 or 4 years, and then they plateaued. And but my income kept going up. So I was very grateful to have the deductions, as Danny said. We still are very grateful to have the deductions. And I don't think, I think he keeps me in tow, but I don't think we're exploitive of anything. And it's, it's part of the business, but we also are independent contractors, and we have a full benefit package if that's what you're interested in. We love the insurance through Juice Plus.
Okay, I do have a question. So seriously, Danny, it sounds silly, but I am taking my nephew in New York City and an old client I know, more I knew you would laugh. I'm taking them to see Elton John on Wednesday night. my point for doing it is to get this group together to introduce them, and they are all three people that I'm trying to position into Juice Plus reps. You know, part of, would I be doing this if it weren't for Juice Plus? They're all friends. I might be, but this is my real goal is to take them out and have some fun, and we're going to have a dinner and talk to them about getting them involved in the business. How much of that honestly could be written off? Because it's not cheap.
I would write off the whole, either it's deductible or it's not.
I think it is.
So yeah, I agree. Hopefully they'll get on the product or become,
Well, two of them just did.
okay, so that's good. That's good.
Yeah.
Yep.
Okay. Two of them did about 2-3 weeks ago.
I mean, the
Elton
bigger,
is-
the bigger the expense, the more, questionable it is in terms of, is it a business necessary expense, or are you really just, but that's a gray area. And I have seen the IRS, and usually if they'll push back, you push right back at them. And as long as there's not a lot of that,
No.
it's not a big deal.
Right. Okay. Thanks.
That was actually a valuable question, Ham, because I was thinking about some of the entertaining we've done for our business. And it's important that you keep track of that stuff, because I think that is you should be able to write all of that off, not just 50%.
I mean, I think, Ham, that's an entertainment expense. It's going to be only 50% deductible anyway.
That's fine though.
Yeah.
That'd be very helpful. Thank you. I appreciate it.
Thank you so much, honey. We do not have time to do the launch, the new teammate launch phase 1, part 1. The next week we can do part 1 and part 2 together. I've been using this launch now since January. Ham has done a number of launches with me and his new teammates, and they're being received very well. It is always a work in progress. So you might see me do one on Tuesday and see it a certain way, and then see it again on Thursday, and I will have changed it, because it's always it's an organic working document. I was appreciative of Siobhan today. One of my areas of opportunity for growth is editing my own work, which you all know I suck at it. So she picked up something that goes back to the launch that I did 10 years ago. She picked up a typo that hundreds of people have never noticed. And she also picked up one other little mistake I made, which I can't find, Siobhan. But anyway, it is a work in progress. The whole point of it is 1, 2, 3 steps, and after that it's too much. So it's all based on basics, going back to the simple basics, and it's centered around that. So I look forward to your feedback and input, what you liked about this going forward next week and things like that. So thank you, honey, and have a good week, everybody.
Thank you, Danny.
Yeah, he was great.
Thank you.
Linda Evenden from Australia is going to be on Cheryl's call, and she is right now, and she is incredible. She has built a huge organization in Australia. I think she's up to 60 NMDs, I think, at this point.
Wow.
I'm not sure, so don't quote me on that, but she is one of my favorite people in the business, and I encourage you to all get on the Jacuzzi call. She's making a big difference, huge impact, and big money for for those of you that are interested. Thank you, everybody. Have a good week, and I'm
Good night, everybody.
Thanks,
Right, everybody. Thanks,
Thanks,
Denise.
Nora. Thanks, Danny.
Good night.
Have fun at Elton